Ladies and gentlemen, welcome to CoinNewsExtra virtual panel discussion. It is a weekly panel discussion that we have. Today is the 13th episode, but it's the first episode that we are going live. We are live on Facebook and Zoom. So we'll be talking about a very interesting topic. We'll be talking about CBDC, Central Bank Digital Currency, the future of CBDC. So joining us today, we have innovators, gentlemen, and a lady joining us. We have Dr. Babatunde Obrema. Dr. Babatunde Obrema is the Chief Operating Officer at FinTech Association of Nigeria. Babatunde, you're welcome.
Yeah, thanks for having me.
Okay, we have Robin Philip. Robin Philip is the co-founder, African Payment and Digital Currency Consulting. Robin, you're welcome.
Thank you for having me.
Okay, next we have Camilla Cadet. Camilla Cadet is the CEO and founder of Entech. Cadet, you're welcome.
Thank you, Lee. Thank you for having me. Always good to discuss CBDC.
Yeah, you're welcome. So we are supposed to have Charles Olibo, but he's yet to join us. And for the meantime, let's get started. So our topic is the future of CBDC. So before we go straight, there are some people that are not familiar with the topic, and people will be asking, what's a central bank? Okay, we have Charles Olibo joining us. Charles Olibo is the global blockchain system expert. Charles, you are welcome to CoinNewsExtra. Charles, you're welcome.
Good morning.
Okay, you just came when we are about to get started. So we were going straight. What can we say is for people that doesn't know what CBDC is, or central bank digital currency? What can we say is CBDC? Cadet, what can you say about what CBDC is?
Where do I start? Well, this is definitely a topic that's keeping everybody talking about what's the future in payments and money. So if I assume that a lot of us here understand what central bank digital currency is, so when we think about paper cash today, it is a central bank currency, it's just not digital. So tomorrow, a lot of central banks are thinking about how do they become compatible with either Bitcoin or other forms of digital currency in order to facilitate and address the problems, a lot of the problems that we've been having when it comes to payments, the speed, the boundaries around correspondent banking. And that's why you see a lot of the fintechs in this space really trying to address and finding new models around payments, because there are so many pain points, and whether it's cost, whether it's jurisdictional limitations, and the access, the inclusion limitation when it comes to banking, efficient banking infrastructure. So central banks, as the owners of the infrastructure when it comes to the currency and infrastructure in every country, definitely is now under the spotlight and saying, look, we're moving into a digital economy. Paper cash and the infrastructure that was invented almost a century ago really needs to get upgraded and become compatible to the current economy that we're looking at. So it's very exciting, because when we think about the opportunity that brings, I posted something yesterday on LinkedIn as far as the infrastructure that needs to go with this. And there's just so much work to do. It's exciting in a way because it means there's a lot of room for innovation. When you think about, when you're building a new city or a new town, and the infrastructure work that needs to go around that, there are just different mini blocks that will need to be built. So it's exciting. There's a lot of innovation to come in this space. So I tell everyone to pay attention to that.
Okay, thank you very much. Sorry for our attendees, there will be, after the panelists must have answered some questions, we'll give our attendees opportunity if they have any questions to ask. So, Robin Philip, what can you say is CBDC?
Well, I look at it from a payments perspective because, we have a payments company. So I'm not an expert on central bank digital currencies, but we spend a lot of time researching payments. And so central bank digital currencies would be a real accelerator for bringing consumers online so that they can understand how to transact digitally. And so it would be great, although it's centralized, obviously, in all instances, which is not quite your utopian libertarian view on things, but certainly it would introduce a lot of consumers to being able to transact digitally, which will mean that the whole cross-border global trading space can expand, and it can bring sub-Saharan Africans, which is our target market, onto the global rails of payments. And, by them having to pay their tax or pay their utilities or whatever with a central bank digital currency means that they will be forced to, the adoption is automatic, as opposed to these independent digital currencies like, let's say, Monero, Dash, Decred, these payment coins, which still have to achieve adoption. Whereas within a jurisdiction, a central bank digital currency brings them all onto the net, which can, with a bit of luck, link to other systems and provide the ability to pay online simply and easily and with most of the population.
Okay. Charles, what can you say is CBDC from your own point of view? You can unmute your, okay.
Yes, can you hear me?
Yeah, go ahead.
Yeah, I think the other participants have done justice to the subject of digital central bank currencies. But I would like to add one or two things to what they have actually done. I would like to add that central bank digital currencies are government-backed digital money or financial assets. Just like other cryptocurrencies out there. But in this case, they have the legal backing of the sovereign entity or the government that the government behind the central bank that is issuing them. Just like fiat currencies have the legal backing of issuing nations and central banks all around the world. And these digital currencies can be transferred via blockchain, and they could actually be spent without having any doubt about being double spent, and they meet all requirements of the normal fiat currency that are used today.
Okay, thank you very much. Dr. Babatunde, what's your take on what CBDC is?
Okay, my take is, look, currencies have always been issued by central banks. So either it's paper money, or it's plastic money, or it's digital. That's really the primary role of a regulator like a central bank. So moving digital just means that it has new advantages. We are moving, so money has always evolved from commodity money to metallic money to paper money to plastic money to electronic money, and now we're talking digital, which means that when it's digital, it's more of a better exchange of value in terms of ability to do transactions, even cross-border. So I think that it's a good development. It's something that everybody should look forward to. The world is evolving, technology is evolving, so money too will evolve with technology. And I think that's just, for me, that's my perspective of the digital currency.
Okay, that's very interesting. So having known what CBDC is, we'll move forward. There are some issues surrounding CBDC. So why should CBDC be issued central bank digital currency? Why do we need it in this era? Charles, what can you say?
Actually, the present payment system globally has run into a hitch. It's fraught with a lot of delays, is fraught with a lot of inconvenience on the end users, is fraught with it's quite expensive at the moment, and there is need for a change. Just like Dr. Babatunde said, payment has evolved from generation to generation, and I think at this point in time, we are in the middle of a renaissance in payment systems. There is a lot of thinking going out there. There are a lot of innovations and all that. So I think at this point in time, humanity, we are gradually trying to realize at this point in time that there are a lot of shortcomings that have to do with the present payment systems vis-a-vis the fiat currencies that we use at the moment. And quite unlike digital currencies, digital currencies are quite cost effective. They have ease of storage and ease of use, and they could actually be a source of income to third world countries like Nigeria and other countries in the sub-Sahara. And with a great understanding, having in mind that for digital currencies to be effective, it has to be interoperable. The interoperability needs to be brought to place in issuing digital currency. So, having said that, I want to emphatically say that the why central banks at this point in time need to issue digital currencies. One, it will bring about ease of cross-border payments and settlements as against the SWIFT payment system we currently have, which is more or less like a glorified transfer. It doesn't really move the funds actually. It's just like a recorded, it's just like a store where the mathematical representations of global funds movements are recorded. Are you getting me? And it's quite slow, it's expensive. While digital currencies issued by central banks could be moved via blockchain in a manner that they are immutable, and they could actually yes.
Just I have to
You could
cut you
actually
short.
get a T plus zero timeline in transaction, real time transaction.
Yeah. Okay, thank you very much, Charles. Cadet, what can you say? Why should it be issued
I
this
can get
CBDC?
you.
No, I'm talking to Cadet. Cadet, why should we issue a CBDC?
So when I think about the different use cases, when it comes to CBDC, right? The idea that a central bank would change the role that they play in a financial market is one aspect of why they should issue CBDC. So the central banks having a responsibility to issue cash, for example. A use case around cash is to say, okay, today it is paper based. Tomorrow, we're looking at how do you digitize cash. That is just one use case that talks about then if you issue digital cash, then everyone can have digital cash the same way that everyone can hold physical cash today. Instead of buying a wallet at the store when you go shopping, you're going to need a digital wallet instead of a wallet in your purse. But then you end up achieving what I call conceptually full inclusion with digital currency. And we spend a lot of time thinking about inclusion when it comes to CBDC. There are different use cases, digital reserves. How do countries manage their reserves with, in different currencies more efficiently? Kind of a wholesale side of things. Interbank settlement can be much faster. So people can get paid faster if you're having deposits in your account and so on, right? There are a few use cases, but specifically around digital cash, I think the central bank should issue digital cash in order to achieve financial inclusion. That is a reach, like Charles was mentioning, using blockchain technology to have the tokenized model around CBDC is a very important design requirement in order to achieve financial inclusion with CBDC.
Okay. Thank you very much, Dr. Babatunde. Why should we issue a central bank digital currency?
Okay, so I'll be talking more from the perspective of I'll use Nigeria as a use case. One, it saves us money. We spend so much money printing currency. The same amount it costs to print a 5 naira note, the same amount it costs to print a 1,000 naira note. So we can save that huge expense. Two, I think that if we are serious, that's the way to go because it helps us to manage corruption because it's driven by blockchain technology, so you can see the movement of funds. So I think that will help to reduce corruption. We know what happens here. Corruption is so bad that we have money stored in water tanks and septic tanks that haven't been discovered. They will come out if we change to digital currency. I also think that it also helps some of our social vices. Yeah, I mean, the way we you know, there's a law in Nigeria that you shouldn't spray money in parties. But it goes on because nobody can control you, nobody can really, affect that law. So I think that it has a lot of advantages. It also helps with tax collection. So the advantages of going digital are quite huge. So I think that if we're not thinking about it, we should be thinking about it because the benefits for the economy are quite huge.
I'll jump in here to add something. I love the idea. We don't talk enough about the opportunity that blockchain brings when it comes to reducing corruption, right? We hear so much about the bad sides in the early days of, this stuff is for, robbers and people, drug dealers, right? So, but reducing corruption, blockchain is a good technology for that. But as we're talking about reducing paper cash, I am of the idea that every country, every central bank will end up maintaining a small percentage of still printed cash. People still like that. People still love the idea of holding paper bills. I think you'll have the younger generation adopt digital currency much faster. My mom has the habit of every, midnight, January 1 or January 1st, she goes to, she has a brand new $100 bill that she puts in her purse, and that's her good luck for the year, right? And that is her routine. Every year she will get her $100. Do not touch it. Do not take it out of her purse for the whole year. Otherwise, it will be bad luck. But I think you're right, Dr. Babatunde. This is something that brings a good opportunity around corruption too. We don't talk about that enough.
Okay, Robin, what's your take? Why should we issue a central bank digital currency?
Well, I said earlier on that adoption is quite an important thing for digital currencies. That's probably where we're struggling the most, is how to get these consumers onto the rails. So I think that's going to be the first most important thing. And then the other thing is to be able to create the rails of payment. So if everybody goes to central bank digital currencies, all the border payments become more effective. And obviously, this is not my favorite thing, but from a government's perspective, it would be their favorite, is that you can have a lot more effective financial control over what happens in your country and with your citizens and cross-border. For example, we have capital controls in South Africa. Yeah, you could, fill a suitcase full of cash and you could, move it out of the country. Whereas with digital currency, those transactions, depending on how much sight the government has of it, can be managed a lot more effectively. Tax can obviously be, because of most revenues will be on the digital currency, taxes collection is more effective. So, and then from our perspective in the African payments side of things, is that it just makes it simple and easier to pay when everybody's using the same currency and has a similar payment system in the country. It's like we have a system called SnapScan here in South Africa where you got a QR code and you go and pay with your QR code. It makes it really easy to have a simple, effective payment system that everybody's using.
Okay, interesting. Having said all these things, people have known what CBDC is and the reason why it should be issued. What are the benefits of when this CBDC, the central bank digital currency, is issued? How can it help the economy of a nation for when we are pushing for CBDC? actually should we go nations? There are some central banks like China, there are other countries that are pushing for CBDC. What do you think it will be on the effect? Which effect, which impact do you think it will have on the nation's economy? Robin, still with you.
So the good thing about it, as I said, is it lubricates the wheels of payment. The other thing is that it brings a lot of consumers onto it. So P2P, B2B, the payment system just becomes so much simpler to be able to pay and get paid, which means that trade can be facilitated not only in country, but cross-border as well. So it brings the African citizens and businesses and organizations and governments into a global scenario to be able to transact globally, simply and effectively. So that's if it's obviously connected, or the ability to have your central bank digital currency connect to other currencies, which I would assume is the most obvious way to design it. So yes, I just think it lubricates the wheels of payments and facilitates a massive increase in the ability to trade. And it brings all of these African consumers online. Everybody, or many Africans have a mobile phone. It's increasingly a smartphone connected, which means that anybody with a smartphone in their hands has the same kind of privilege and opportunity as anybody else in the world to be able to pay, get paid, and transact.
Okay, Babatunde, what do you think CBDC, the impact it will have on the nation's economy, more especially in Nigeria? You're joining us from Nigeria.
Well, I mean, I think it would impact positively on the economy. I mean, there'll be transparency in the way transactions are done. It will impact on financial inclusion. You see, one thing about technology is the fact that, look, when mobile phones came, it was like, oh, I mean, how will it be accepted? But my mom is 85. She uses a mobile phone. So the moment technology changes and government is moving in a direction, people automatically are forced to move in that direction. So it's to have the political will to be able to make those decisions. Once those decisions are done, people will flow in, because you know that if you don't do that, you run into trouble. As a matter of COVID-19 has taught every one of us a lesson, because a lot of people were stuck because they couldn't have access to cash. They couldn't transact because they were not financially inclusive. So now it's going to help financial inclusion, and it's also good. There's going to be ease of adoption of new technology, knowing that I need to have that backup just in case something goes wrong. But if that is the way to go, people will automatically align. So the issue of financial inclusion will be achieved much faster. The economy will open up because there's transparency. And people will be forced to invest money into businesses rather than hiding them under the beds. So I think that it will be positive for the economy.
Okay, Charles, what's your take?
I would rather look at it from an economic perspective. Experientially, we did a design for a white paper for one of the African countries within the Sub-Sahara most recently. And they themselves saw CBDC from the economic point of view. They looked at it from the fact that, you give, say, 100 million naira coins. Let's use Nigeria for an example. You issue 100 million naira coins on blockchain, and with utility and government backing. And over time, let's say you issue the pegging into 100 million naira coins as against $1 USD, and over time, due to usage and utility, the value goes up to say $5 to $5 now, as against the 5 million naira coins you issued. So by so doing, you see you've been able to generate revenue or income, and thereby improving the economy of the host nation or the issuing central bank. So that is one advantage I believe the CBDC has, or how it will impact on the economy.
Okay, Cadet, what's the take?
Well, for when we think about the benefits, one thing that I want to emphasize is definitely the importance on design. what we're seeing right now with our work and with the Bahamas and some of the ongoing research, we released a working paper on digital cash in the context of the US, but it applies to a lot of different countries as well. The infrastructure that needs to be built, we talked about adoption before. We definitely, when it comes to engaging central banks, that's why we're in this space to tell central banks, look, if you want to achieve financial inclusion, if you want to achieve, if you want to adoption to be successful, there are certain principles that have to be factored in when it comes to design, because it is not automatic that just because you issue a central bank digital currency that you'll have it. It is true that because of the government mandating and the backing, there are certain core principles that other currencies cannot provide anyone, right? Like the stability, for example, versus the fluctuation in Bitcoin. So there are very good benefits, but in order for you to capitalize on those benefits, you have to design it properly. Give you just a basic example. If you introduce a CBDC, and then you said everyone has to have an ID in order for them to have a wallet, right? You're still going to have a financial exclusion problem when it comes to the areas that people don't have documentation or proper IDs for them to fill it out. So you have to be intentional when it comes to financial inclusion. KYC, AML. What if you introduce and roll out a tiered model or risk-based model to say, yes, if depending on the type of KYC that you do, you'll have access to cross-border payments via your wallet. You'll have be able to do payments or just receive benefits, for example. And because those benefits are not automatic, they have to be thought through to this with design. And benefits on the economy, we talked about the trade, the Africa Continental Trade Agreement. When I looked at the document and the the big conversation that's happening around that, for me, the frustration is usually around how come we're not talking about the money piece, right? We talk about the physical infrastructure that needs to be built. We talk about the goods and the regulatory space and improvement that needs to be in place in order for countries to trade together. But and Robin, maybe you can attest to that, right? But across the continent, the lack of liquidity in each currency, you literally have to go from naira to euro to cedi, right? So you have to think about in the design, do you want interoperability? It's such a huge opportunity, right? Such a huge opportunity for you to find interoperability throughout the continent. So Charles talked about that from a token to token and technology to technology. Interoperability is one thing, but country to country, right? Having interoperability throughout the continent, it's such a huge opportunity. So imagine that a trader in Rwanda wants to pay a buyer and wants to buy something from Ghana, and having a digital currency that goes from cedi to Rwanda francs, and within seconds, and having either the central banks having a mechanism to settle within themselves, or you have an exchange mechanism, and this is where the innovation comes in, right? Opportunities for new players to say, yes, let's take, the Rwanda franc and give out token digital cities. So you start creating exchanges and markets around this kind of stuff to provide liquidity.
Okay, thank you very much. Well, thank you very much. Let's move forward so that we'll have time to take questions from attendees or participants. So once we finish with our own questions, we will be able to pick questions from our attendees so that it's good that we hear from them and know the questions they have. So moving forward, I will ask this question: are there some central banks that are against CBDC? And what can you say about central banks who are against it? So if there are some central banks that are against this central bank digital currency, I know not every central bank should be for it. And what should be that you should tell them about CBDC? Cadet, there are some central banks, you no, not that you mentioned, you should be able to tell them why they should go for it if there are
Okay, all
benefits.
right. um, there are some I've talked. Let me see. Let me give you the context here. I've talked to, I want to say, about 15 different central bank executives when it comes to central bank digital currencies. I can tell you that 90% of them understand that this is coming and that they need to prepare. The question is, now what, right? How does it work? How do we get educated about central bank digital currency? What is the impact on the banking sector, for example? That's a big concern for central bankers. People could argue the central bank is the government and then the banks, and they don't want to help the little guy. This is kind of a rigged system anyway, that kind of stuff, right? So I have my friends who usually tell me that. It's like, why are you helping those guys? But in the context of understanding that they are about to be disrupted by Facebook, that they are about to be replaced by Bitcoin, an algorithm, a computer. I tease people, right? So do we want our economy running, on an algorithm? Is that what we're saying? But so the competitive nature of this space makes a central banker realize that now they are in a spotlight and they have a decision to make. They can either put their hand in the sand and hope for the best, or they can get in front of this and adopt, right? It is, again, when you look around the world and all the big central banks that are investing, there's a reason why Bank of Canada is spending so much time. There's a reason why Bank of Japan and Bank of England is spending so much time investing in this stuff, right? They understand it. So I think from a competitive perspective and just, innovation and not being able to put your hand in the sand anymore. That's just not the time anymore for central banks to do that.
Charles, what can you say to central banks that are against it, if there is any?
Well, I'll just be forthright in telling them that they innovate or they die. That's just it. Because innovation waits for no man. So you either innovate or you die. That's just my short response to that.
We used to say that about the bank, right? I mean, we saw how the fintechs kind of took off. We used to say about the banks, it's just going up the ladder. It's like, okay, now it's your turn, central bank. That's the way I look at it.
Okay, Mama Tunde, what can you say?
Well, just either get on the train or be left behind.
Very short and direct. Robin?
Yes, no man is an island. So if they don't put in systems that are compatible with the rest of the world, then their economy is going to be isolated and die and won't achieve the benefits of being linked to being able to trade with the rest of the world.
Let's take some questions from participants before we continue. Somebody said, using the name Obioma Elite, he said, what's the impact of digital currency on the value of money? What's the impact? So what can you say?
I'll jump in just because I think we have to be very, very honest about what central bank digital currencies can do and what they cannot. I'm big on that, right? When it comes to Bitcoin, we know the fluctuation on the value is by design, by nature of it, right? So we have to factor that in. That is something that is good, meaning that you can buy it and the value goes up and you can make money. When it comes to central bank digital currency, what we're talking about is a stable token here that does not change in value, whether it's 1-to-1 to the Naira, for example, it is going to behave the same as when you're looking at Naira versus USD, Naira versus Euro, Naira versus, renminbi, the Chinese yuan, right? So if it's the exact same thing, I don't foresee, and I think we have to be careful on saying that people can actually make money on CBDCs. It's not the CBDC per se that you're going to be making money on. If you can make money on FX margins today, you'll be able to make money the same way tomorrow on CBDCs. It'll be faster. You'll have, greater velocity, better liquidity for sure, much faster settlement time. So you kind of, you can increase your margin and make more money like that. That's true. But on the value itself, it's not something that's going to change from a technical perspective.
Okay, is there any other take? Anybody with answer? So that let's take more. Any other person? Okay. This person is from, it says Mustafa Ozasin. He said a central bank digital currency goes against everything blockchain, which is meant to be decentralized and trustless. So what can you say, Robin or anybody, do you have any take? Is this person saying that a central bank digital currency? Okay, continue.
I think that's what we're all aiming for, is a world where there's not such a centralized amount of power, and that the autonomies devolve to consumers and citizens of the world. So, but it is well into the distance, so there's a long way to go from here to there. And in my opinion, central bank digital currencies are only just on the road to there. It's really about making the system that's already there a little bit more autonomous, frictionless, and more compatible with the rest of the world. But I don't think we're there yet. So we've got a lot of work to do. I mean, Ethereum is working well on that platform to be a new platform of the internet, which can be used by its citizens. But I think governments and central banks are still very much in control of the economies. And so we have a way to go from there. My personal opinion is that, currently we've got mobile money, cards, and bank transfers. And then that will probably, I think, evolve into stable coins as the next, depending on the legalities of it. Central bank digital currencies have a lot of work to do before they can be rolled out. So we're still many years away from that, in my opinion. And then the big tech coins like Libra just could come in with WhatsApp. If they can get under the radar and get over their legal hurdles, they could completely disrupt everybody on everything. So, yeah, so that's my take on it.
Okay, let's see if we can take other questions. How does digital currency impact monetary policy? Somebody's asking. Another question here from Boulevard. He said, hello, okay, is Boulevard. He's asking, my question is, Dr. Obrema, is a CBDC necessarily based on the blockchain? He's specific, he's asking you, Mr. Dr. Obrema.
Okay, the answer is yes. I mean, what is blockchain is just a distributed ledger. And business have always been done based on ledgers. But what is happening now is just the fact that this is open and you can see how transactions are done. There's transparency. I mean, I used to be a teller in the bank when I started my career, and you did ledgers manually. So I only see the ledger, and my supervisor sees the ledger, and then maybe quarterly the inspectors come and see the ledger. So if anything had gone wrong within that period, I could get away with it. But now everybody can see it, and that's the beauty of that technology. That, I mean, it's dynamic and it's transparent.
Okay. Another question is somebody is asking so what would be the impact on tax havens such as the Gambia? Perhaps Robin and Kamele could speak to this. So Robin.
I'm sorry, I don't know. I haven't got any expertise in that area, so I'll defer to one of the other candidates.
Okay, Cadet.
What was the question again? Can you read it again?
What could be the impact on tax havens such as the Gambia? That's the question. So that's how the person wrote it. What could be the impact?
So I'll answer that in the context of the other question around monetary policy. It is all about policy around CBDCs, right? the technology itself is going to make a lot of things transparent. But if the central bank still says that they're going to offer tax havens to businesses, that is true that it probably will be more visible now, more visible than now, to actually move funds and get tax credits and get tax protection in certain jurisdictions. That will make it more difficult. But then it is about monetary policy. If the monetary policy for a particular country is to say, we're going to allow, we're going to control inflation, for example, or unemployment, for example, with foreign direct investment, right? That is a monetary policy or economic policy that you say, this is what we do, and this is how we grow our economy, this is how we get capital investment in our country, is by offering tax deferral or tax deferment or tax benefits. So that's not going to change monetary policy. The technology blockchain is going to force some decisions, but not automatically. It will be up to the central bank to design and put the right framework and policies around their CBDCs.
Okay, Abubakar is like Abubakar. Can we allow if he wants to say something? Let me see if Abubakar, do you have a question? Abubakar? Okay, he's not. He wanted to say something. So, let me go back to my questions. In case you are with us and you still have questions, you can still forward your questions. Or if you have any questions, we'll ask our panelists. So, my question still goes, what's the tech behind CBDC? I guess somebody asked them. So, what's the tech behind CBDC and why is it said to be unique? Why is it different? You know, there have been other payment system. Is it that is unique? CBDC is unique because it runs on the blockchain. Or what can you say, Robin?
So yeah, I'm not an expert in terms of the technical aspects of central bank digital currencies because I'm in payments and it's more about the use of them. That is my expertise. But I mean, there are, first of all, you know, distributed ledger technology is a better way for central bank digital currency to be designed so that there's accountability. I have my reservations around central bank digital currencies. Here we're saying what's good about them. I say, you know, I have a slightly jaded perspective. Depends how it's implemented. Like Carmel said, for example, we're not going to fix anything by putting it in, but it's certainly going to highlight some problems when central bank digital currency on the blockchain is implemented. And then the technology, there's a number of different technologies around it. You know, the ones I've heard of is Consensus, Hyperledger Fabric, Cosmos. So, but somebody else would be more qualified to comment on the technological aspects of it.
Okay,
I'll piggyback on that when it comes to the blockchain. I'm a big advocate for using blockchain for CBDCs. Some of the reasons that we mentioned earlier, as far as the speed, the distribution, this distributed ledger mechanism, as far as having better transparency and kind of one source of truth, and having different stakeholders, you know, accessing the same ledger and seeing the same information, the trust that can come in that. There are concerns depending on what protocol and blockchain you're using. We're still waiting to see what Hyperledger Fabric can do around something like this because of the lack of tokenization capabilities versus Ethereum that has a natural smart contract capability that allows you to tokenize just about anything. But you get into a situation where you start talking about, okay, so what about privacy? How do you provide transparency and still provide privacy? That's a notion that we're spending a lot of time right now, and you know, happy to hear some thoughts on this. But the idea of trust, right, is something that's elusive, and more people are losing the trust in their government and their countries, and especially in, you know, with COVID and corruption and so on. Can you use blockchain to actually say, yes, you can trust us that we're not spying on you, that we're not taking your tax dollars, that we're not, you know, just taking your information and selling it and commercializing it by putting it on a blockchain. So when you actually bring more people on a blockchain and say, this is your data, a way to actually prove that you're not spying on them is to enable the blockchain and say, here is the ledger and the browser, exposing that to the public in a way that, you know, hides information. You don't know who that is, but having a mechanism in the blockchain that says if a government wants to access your information, that request or that access will also be recorded on the blockchain. There's a very different concept to talk about how do you provide trust through transparency. And a way to summarize it, if you're not spying on me, prove it. So that's a very interesting concept on how we get to that, and we think blockchain can be very powerful in providing privacy and trust.
Okay, before we maybe before Charles, before you answer, let's see. Mr. Abubakar, are you still with us? What do you have to say? Abubakar, Mr. Abubakar Umar. Okay. Okay. Charles, what's your take? Just let's continue.
Yeah, yes, my take there is that the blockchain and brings about a lot of transparency to transactions and settlements, whether in country or globally or cross border. It brings some form of transparency that is quite missing in today's system that everyone is yearning for. You know, and everyone is talking of corruption and all that, money laundering, terrorism financing, and all that. But now, when a central bank comes into issue a digital currency that is centralized, that can be viewed, I think most of those issues of concern will be eliminated to a larger extent. And when it comes to trust, I think with the introduction of the smart contract that goes along with some of these programmings, a lot will be solved, because when the codes are written into the fabric of the blockchain that runs a particular program or a particular CBDC, I think it goes a long way to eliminate, it goes a long way to give confidence to the consumer that actually what the government said is what they will do in the end of the whole thing. Yeah.
Okay, thank you, Mr. Dr. Babatunde. Well, what's your take?
Well, I mean,
You know, what's the tech behind CBDC and why is it said to be unique? Is it because it runs on the blockchain?
I think I'd answered that question. I mean, blockchain, distributed ledger technologies, I mean, it allows for transparency. Let me just say this. You see, a financial system is as stable as the regulations that govern it. So in all of this, financial stability is extremely important. So, I mean, I'm an advocate for regulation, but regulation must be progressive. It must not stifle creativity, it must not stifle innovation, it must not stifle progress. So there has to be that balance that goes with it. So it's important that, I mean, I believe that central banks should issue currencies. They should regulate how currencies go, but then it must be in a progressive manner, not one that regresses the economy, but one progresses the economy. And I think that's a direction that we should look at it. So, I mean, if you don't have anything to hide, why are you scared? I mean, that's another way to, so that's the way to look at it. So I think that the technology is good.
When you come up with those questions, it's kind of awkward. Like, what's the problem, right?
So technology is good. I mean, it makes transactions faster. It will open up the economy. Because more investments will come into an economy when people can see transparency, and you are sure that, I mean, there's integrity, there's credibility in things that are going on within that system.
Okay, thank you very much. Before we round it up, we have some questions to take from participants. Someone is asking, Uzoma Dozier is asking, what infrastructure is required at the consumer level to democratize this payment system, especially when we consider the infrastructural gaps we have in Nigeria? I guess people in Nigeria should be able to answer that. Do you understand the question?
Well, let me attempt that question. It's there's no doubt that we have infrastructural gaps. I don't think that for us in Nigeria, it's something that's going to happen overnight. We have a long way to go. But then we should start talking about it. We should start planning towards it. We should start addressing those infrastructural issues. We should not play catch up. And then that's always been a challenge, I mean, for a lot of, what's it called, developing economies. We play catch up rather than, and the beauty of technology is that you don't have to play catch up, you can actually join. So yeah. I think that rather than playing catch up, let's join. So let's start the progress, let's start the process now. What are infrastructural gaps? You know, this is the way the world is going. The Bank of International Settlement is talking about it. IMF is talking about it. The major economies are talking about it. We should be talking about it. Should be a front burner now. What do we need to do to join? Not that how do we catch up? No, I don't think that that's the way to. So we should deal with those infrastructural gaps. They exist, we know. So let's identify them and let's start addressing them.
And Nigeria is such a lion, right? It's the lion, right? It could lead the continent into this. And I know South Africa is working on theirs, and they've been, investing and experimenting with this. But I think Nigeria and Ghana is talking about it as well, right? Rwanda is talking about it. I think there's such an opportunity for Nigeria to lead as well. And I saw the announcement for the FinTech Sandbox. When you're talking about innovation and being able to have progressive policies, when you think about the process, a structure for that innovation to feed into policy, I am a big believer that we need to change the relationship between regulators and innovators. It needs to be a collaboration, not a conflict, right? And maybe this is where the FinTech Association comes in, kind of building that bridge between regulators and innovators, and using the sandbox, for example, if the CBN, I hope we're working on it, to introduce a prototype or test CBDC in their sandbox for innovators to test against. Imagine how powerful that would be, right? To introduce without destabilizing the current market, but start innovating in parallel, right? Why not?
Okay. We still have like 8 minutes before we go. So if you have questions, you can still drop. Somebody is asking, is using Robin Philip account, maybe one of the people that joined. Do you think it is possible to sort out the regulatory issues quickly? Because the regulatory and supervisory frameworks of many central banks are not ready for cryptocurrency. And many are using a wait and see approach, like what Baba Tunde was saying. So do you understand the question?
Well, I think I could have a bash at it, but it's not entirely my area. So the other people may be better placed. But
okay.
the problem, the problem that I have is like CBDCs are not going to fix bad financial management. So I'm also wondering, it's a bit of a double-edged sword, because people are looting the coffers at the moment. Why would they be encouraged to introduce a central bank digital currency when they don't have that level of transparency and accountability at the moment? So that was one of my questions. And then also in Carmel's, might have a better comment on this, but how do they know that they can find somebody independent to actually work with that would not be furthering their own objectives, but furthering the possibilities and opportunities for a jurisdiction like Nigeria? And I agree with you that Nigeria has a fantastic opportunity, as Carmel said, to be the lion of Africa, because it already has an incredibly well-organized financial system. In terms of cards, mobile money, their encouragement of mobile money, their licensing of it, and the bank transfers are so seamless in Nigeria. So they're well positioned for that. But I do have a problem in terms of how, how do you change the regulation fast enough? How do you find somebody independent that they can trust that is going to lend them an ear and not usurp their power as a politician or as a central bank authorities? But I do think that regulation is a massive catalyst or stumbling block for the implementation of any digital currencies. We can see what's happened to Facebook Pay in Brazil and India. The same thing, is happening in the rest of the world. So regulation needs to be able to be adopted and to see these two trends run together in parallel to where we can have digital currencies become more prevalent and the way of doing business.
Okay, let me see if we have other questions.
Well, let me just speak to Kamel's comment on the sandbox. I mean, the central bank is sent the document to us, the backstores, for our input. And we actually will be having a session on the 7th of July with all the stakeholders to discuss it and send our inputs to the central bank, and which is a good development. So we have that relationship where we want to do this. What are your inputs? We bring in our inputs, and Nigeria is making progress. I would say that. I mean, that at least in that respect. And recently, the Security and Exchange Commission came up with guidelines for a fintech roadmap for the capital market. That was also driven by relationship with the Fintech Association of Nigeria. So there's that relationship with regulators. We're making progress. So I think that. So just to let you know that we're making progress.
That's very good. Yes, I saw that. We'll be sending inputs too. I'm sure from different perspective than you, we're building a solution actually for Sandbox to scale up, to help central banks scale up their Sandbox processes, their reviews.
Okay, somebody is asking Jude Ogene is asking, how would you design CBDCs to overcome the shortcomings of fiat currencies? Somebody is asking.
How would you describe CBDC for what?
How would you design CBDC to overcome the shortcomings of fiat currency itself?
Yeah, I would like to, okay.
Sorry. Okay, go ahead. Okay, I'll go. From a very basic design, issuing digital cash is a very foundational and fundamental design for CBDC, because the moment you do that, you put digital money in everyone's hands. Everyone who has a cell phone, everyone who has a computer, and the wide interoperability. Of course, the infrastructure has to be built to support it, but I think from a design perspective, don't start, or not to start, but in addition to reserve and wholesale, use cases, introducing and designing CBDC for retail starts with digital cash, the sovereign currency. That's the most basic layer of the infrastructure, and that's how you reach financial inclusion. Everything else can be built on top of that.
Hello, any take on that?
Yes, I think she has done justice to it. By design, fundamentally, CBDCs are quite better and quite better than what we have now as compared to fiat currency. And the next thing that has to be built into it is the interoperability. So once a CBDC has interoperability with other CBDCs across the globe, you could see that, just as we discussed before, my mother in the village in Nigeria here could as well buy things from Florida, Tampa in Florida, and all that from her mobile device and all that. So I think it will be it has a better functionality and use case scenarios than the fiat currency we have now.
Okay, well, let's take the last question. I don't think I understand the question very well. The last question before we draw the curtain. You say, I'm a PhD student in Morocco about blockchain. How do you think its evolution, new or advanced, please? The person went on to say, as cryptocurrency is forbidden in Morocco, would a CBDC take place as the other countries in Africa, please? This person is asking, who is this?
Yeah, so
Neha, okay.
So from what we're seeing is that central banks don't feel comfortable labeling their CBDCs as cryptos, even if it smells and looks and feels like a crypto. They say no, this is not crypto. But right, it's crypto. If you use blockchain, if you use cryptography, and so on, so it's all about the design. But the way to think about it is other digital currencies that don't have this ability of a CBDC, that don't have the backing of a central bank, will always be a risky or riskier asset in the market. Just like if you were to buy stocks, if you were to buy, any capital asset, equity asset that fluctuates and you take the risk, that's the same thing. So you have an upside that you can ride and you invest in that to get the upside. Other currencies can offer you the same. And then you'll have different currencies that are network based, right? Closed loop networks that use their own stable coins, for example. They will have value, but they will not compete because they don't provide the same guarantees. There are certain principles. They're not legal tenders, for example, right? They're not broadly accepted. The network has to be built around them. There needs to be a demand for it, and the market will drive the price for others. I believe that the competitive nature of having all of the above in the market and let people choose what currencies they use and what asset they invest in, the same way we do today. And so I think you'll see central banks getting more comfortable with digital currencies once they have CBDCs, because it is about the infrastructure. It is about having financial stability and letting the interoperability between CBDC and other digital currencies.
Okay, thank you very much for joining us. So we have exhausted our time. I don't think we'll proceed with any other questions. Okay, we are so grateful to our sponsors. We have Nimides as our sponsor, we have MTech as our sponsor, and we have Miami University Blockchain as our sponsor. We are grateful for our panelists. We have Robin Philip. Robin, thank you for joining us today.
It's been a pleasure. Lovely to meet all of you. And well done. This is fantastic to be broadcasting this kind of knowledge across the continent. Thank you.
Okay, thank you, Kamel Cadet.
Thank you, Lee. Thank you, CoinNews. Nice to meet you, everyone. And hopefully we'll see each other again soon. Hopefully you guys will let me in from the US.
Thank you, Charles, for joining us.
I appreciate. It's been a wonderful time with everyone. I appreciate. Thanks, Dr. Baratunde, for the opportunity once more.
Nice to meet you, Dr. Babatunde.
Nice to meet you too.
Okay, thank you, Dr. Babatunde very much.
Thanks a lot. Thanks for having me. Thanks, everybody. Nice meeting you.
Okay, we CoinNewsExtra, a blockchain, cryptocurrency, fintech media platform headquartered here in Lagos State, Nigeria. So we have the mission of creating awareness about this ecosystem. We believe that the blockchain cryptocurrency space will help. It will play a very vital role in development of nations, more especially in Africa. So that's why we are doing our best. If there's any way you feel you can join us, you can partner with us to make things happen, because these are a weekly blockchain panel discussion. It comes up by this time, everyone is there. So we have different topics and different panelists. It happens that this is the first edition we are going live, and we really, really appreciate even our attendees. We are so grateful people participated, asked questions. We love you all. Thank you very much. Bye-bye.
Thank you.
Thank you.